last week we talked about the classical fake breakdown. That's the Wyckoff spring setup. So a spring of the previous swing low level, or you can consider this as a last point of the support, and then followed by a sign of strength rally. So pretty much this is just a fake breakdown that really just spring the previous swing low level, supply increasing slightly, and followed by a reversal bar and immediately breakout of the downtrend line and acted as a test bar. So that really just fulfilled the immediate first target, which was the previous swing high level, so 7600 to about 7640, and eventually just overshoots with the breakout bar. So this is very constructive and very bullish with a momentum behind. So what happened next is actually more important. So right after the breakout, so if we really have a bear intent, or a lot of the speculators just want to short the market for a mean of reversion trade, or just some form of the speculative mindset, probably for a bear type of the setup or uptrust, then it really need to violate this last commitment bar to the upside. So even with a pullback or profit taking, go back to test the axis line, so which was the previous resistance level, now turn the support level, and it could extend to this zone as well. So somewhere around 7540 all the way to 7600. So that is really the zone that it could come back to and to consolidate before it rally up further if there was a profit taking activity. However, for the past few sessions, at least for the past 4 sessions, so since the breakout happened right here, okay, so that was on Tuesday, so last Tuesday, and we only got 4 bars that's not even managed to break below the 1/2 of this bar. Okay, so that shows the bullish intention. So a very shallow pullback at probably 30% of the breakout bar. So this is the spread of the bar. That's roughly about pullback of 30%. So definitely not more than 50%. So that shows the bullish intent. And with decreasing of the supply, suggests that there's not much profit taking activity, not to mention about some bear intent, because if we really have some form of the distribution, then this sort of the big bearish bar with spike of the volume, spike of the supply, similar to this kind of the bar, will be normal. So that is the thing that we need to pay attention to. However, for the past 4 sessions, the pullback is relatively shallow, not even 1/2 of this breakout bar, suggests that the continuation of the upside so is intact, and we could still bet on continuation of the trend to test a higher target. So right now is very close to 7800, and in fact on Wednesday it actually hits more, exits 7800, 7820 to be exact. So next target will be 7900 to about 8000, which was the round number, and I believe it could still further push to 8000 before it had a meaningful pullback or consolidation. So right now this is just like a textbook style rally. We have a strong rally, strong trend, followed by a change of character, and then another reaction, a test, and this sort of acts like a last point of the support, or a localized spring of the previous swing low level, confirmed by this sign of strength rally, breakout above the resistance level, holding up, okay, and building up the bull flag. So that's just a textbook style setup. So suggests the continuation of the uptrend to test a higher target. So next target will be 7,900 to 8,000. So given okay, so given this kind of a strong momentum, okay, and this is something that we have never seen within this trading range. So that really just confirmed this is a sign of strong rally. So very similar to this kind of the rally. Okay, well, that's back in April. So April was another spring, or you call it a shakeout, because the magnitude to the downside is huge. Okay, so this is a bit scary. So that's a spring or a shakeout followed by a sign of strength rally. And this sign of strength rally, let's just compare the momentum. So when it's actually breaking out here, so take a look at this form of the momentum, and then followed by very shallow type of the pullback. So this is similar. So this could be an analog with rally context. So we got a strong momentum behind. That is the strong rally here. So the strong rally, and after the strong rally, we got this sort of the pullback consolidation. So here's a pullback consolidation. So that's one, that's one, that's two, that's two. So next rally should be a breakout of the current flag flag setup, followed by continuation of the upside. So let's just watch out for another strong rally, at least moving to test the targets 7,900, 8,000. We also need to think about at what point would it violate the bullish trend. So use this S&P 500 as an example. Should this bar, this is the last momentum bar to last commitment bar to the upside, should this bar be violated, means a bearish bar that just commit below the low of this bar, which was 76.29, or you can just use like 76.20. So just break below this bar. This should be the first sign that we need to pay attention to. So not to mention that this is pure trend reversal, because it could simply means just a temporary pullback consolidation before it resumed to the upside. However, the bar here is the first level of the defense, and also followed by the zone right here. So 75. Maybe let's just use this level 75.40 all the way to about 7600. So let's just use a round number. So this is a zone, okay, that it could allow for some pullback until you hit the zone and then to consolidate. So if this level, if the zone get violated, so further commitment below 75.40, then this is the point that I will consider as a trend, a change of the trend to the downside. Okay, so until then, this is still up and very bullish.